Section 5. Unit 3, Private Sources of Funds. Lesson 1, Private Financing Assistance, Individuals. Lesson 2, Private Lenders, Private Loan Companies. Lesson 3, Review of Sources of Funds. Sources of Funds. Study Sheet. Commercial banks. Primary source of capital is checking account deposits. Provide construction, interim financing, home improvement, manufactured housing, and home equity loans. Demand deposits equals fund supply. Interim financing, e.g., construction loans. Life insurance companies prefer to finance large, commercial projects rather than traditional single-family homes. Often purchase blocks of single-family mortgages from the secondary market. Credit unions. Valuable resource for real estate financing. Have greater flexibility in making loans. Generally not governed by federal, state, or local regulations. Mortgage brokers and bankers. Mortgage bankers originate their own loans and stay with the loan for the entire lifecycle. The SAFE Act requires loan originators to be fully licensed and carry a mortgage surety bond. Mortgage brokers seldom invest capital, work with many lenders, and don't service the loan beyond placement. Pension funds and trusts. Buyers can borrow money from their pension plans/retirement accounts. Funds don't count in the debt-to-income ratio used by lenders. Failure to pay back the borrowed funds in time is considered early distribution. Real estate investment trusts, REITs. Give investors opportunity to invest in real estate. Can be equity, mortgage, or hybrid. Invest mostly in commercial and multifamily real estate. Sold like stock on the open market. Real estate bonds. Used to secure funds for financing real estate projects. Municipal bonds are used to fund local projects like roads, schools, and other infrastructure. Corporate bonds are credit instruments used to raise funds. Foreign lenders/investors. Foreign lenders provide real estate loans for U.S. purchases. Foreign investment in U.S. real estate is less stable than in prior years. Between April 2018 and March 2019, foreign investors purchased $77.9 billion of residential property in this country, a decrease from a peak of $153 billion just a couple of years prior. Mutual savings banks and savings associations. Mostly concentrated in the eastern U.S. Prefer to keep lending in their immediate geographic area. Private financing. Sellers. Family member or other individual may make $17,000 tax-free gift to other individuals within IRS limits. Private loan companies. Companies may be national, regional, local, or individual entrepreneurs. Use junior financing, require collateral. Higher fees and interest rates. Fees and interest. Private loan companies, quick reference. Buyers. Sometimes a buyer is unable to secure enough financing on their own to close the purchase of a home. In these cases, it's sometimes possible for them to arrange financing through a private loan company. Private lenders. Private lenders include large national companies, regional providers, local offices, and individual entrepreneurs. Private lenders issue junior financing most of the time, which is a smaller loan amount, due in a shorter amount of time, with collateral as backing. The lenders are likely to require some sort of collateral for the loan, usually in the form of a lien against the property. This lien will be second in priority to any first mortgage lien. Private loan companies take a risk by covering riskier loans that commercial banks won't touch. To compensate for that risk, private loan companies charge higher fees and interest to the borrower. Despite the higher cost to the borrower, private loan companies play an important part of the mortgage lending process, since they help those who need just a little extra funding to meet their goal of property ownership. Individual financiers. Many times, a buyer is unable to secure enough financing to close on the purchase of a home. In these cases, individual financiers may help. Sellers. Sometimes the seller will provide financing for a portion of the purchase price. The seller may use junior loans, contract for deed, and other creative financing methods to cover a portion of the purchase price and help the buyer complete the transaction. It's crucial that the buyer disclose to the lender the source of any financing beyond the actual mortgage loan. Buyers. Some buyers get help from family members to purchase real estate. Under 2023 tax laws, an individual may give up to $17,000 tax-free to any other individual annually. If the donor is willing to pay tax on the gift, any amount is okay. For example, if all 4 parents of a couple could each contribute the maximum tax-free gift to each of the 2 borrowers, the couple would receive a total of $68,000 in private financing assistance. In other words, that would be $17,000 gifted from each of 2 parents to each of the 2 borrowers, or 4 times $17,000. Remember, this can't be a loan, because then it must be calculated in the debt-to-income ratio. It must be given and treated as a gift.